here's Apple. And so this was the last two earnings cycles, okay? This one was on the, Apple had, this was going back to the May, okay? So Apple had earnings release on May the 4th. At that time, it was trading right here at $165, okay? And then it just went crazy to the upside, right? All right, so then the second one I'll show you is earnings trade 2, which it had, this was the most recent one. It had its earnings right here on the 3rd of August. At that point, it was trading at 191. And then it came down, just kind of zigzag. So with this one, you could have just gone long Apple, it went up. But what if the markets like they are now, just so much market uncertainty, you know, one day the market's been up, the next day it's down. So what if you then had an Apple trade and Apple had great earnings, but the broad markets were getting crushed? Well, you're just going to play the spread, or it could be the other way around. So this next, what I'll show you next is that Apple was going up, but QQQ, its correlated pair to it, was going up faster and even more stronger than Apple. So here's the spread. So this is amazing. Okay, so this is what's so really cool about spreads. So here's the spread. So just kind of bear with me and I'll walk you through it. So here's the spread between, this was, you know, typically I could have done it the other way around, but I usually like to do the spread where you're long, like in this one, you're long QQQ, short Apple, or you could look at, I could make the spread where you see it, short Apple, long QQQ, the same difference, right? So you're long QQQ, short Apple, or you could look at the spread, you know, on a graph with Apple short, QQQ long. So this one, Apple earnings came out. Apple then went really up to the upside, big time. But this one actually had better performance, and you were market neutral. So if the market had turned over, you're still making money. So this one on the 4th of May, that spread was at QQQ was trading at $152 per share over Apple. So it was trading right here. That was the spread. QQQ was $152 greater than Apple. So that's all you're playing. And then the spread started trending up. See the spread trend? And then it trended up and it went to a high of right here to 191, right here, right there, on July the 18th, right there, okay? So it went from here. At that point, QQQ was $152 over Apple, and then QQQ was relative, the spread, QQQ was stronger. It was going up faster and greater than Apple, which was also going up at the same time. And now that spread, it was up to $191 per share over. So that was, so if you look at the gain on that spread, you got in at, say, if you got in at 152 or somewhere around that, 191 less 152, that's a movement of $39 per share. And with this, we're doing options. So one option contract is equivalent to 100 shares. So times 100, if you did one option contract, the spread, you would have made $3,900 on one spread. Now, if you did this with the actual shares, you can see the difference in cost. It costs you a lot more to buy and sell, you know, those shares. So that's the beauty of it. So that's one option contract. If you did 5 or 10, you can see you made 39,000, etc. So that was right here on the 4th, and then here was the 3rd, the next earnings right here, and you can see the spread here went started was at 183, and then QQQ started outperforming. It got up here to about a little over 195, and then ended up going up here to 201. So that spread blew from 183 up to 201, and even where it came back here, you know, the markets were going up or down. There was still, you weren't even at your break even. So that's just looking at that, you know, from 183 to 201, that was up $18 per share, or per 100, that'd be $1,800. So that's the beauty of the pairs. And then what I'll do is I'll use my indicators down below to help kind of enter the spread. So these are my cycle reversal indicators. and momentum indicators. So these will help, you know, like cycle reversal here, momentum going up, cycle reversal here, momentum going up, things like that. So really, really good, great way if you want to play a post-trend trade.